Welcome everyone to the next episode of Impactables with Rishabh. Today we have a co-founder of Done Deal, an M&A platform specialized for startups acquiring deals across different startup ecosystems. Welcome Anis to the podcast.
Thank you.
So we'll start with this. You have been a banker throughout your journey. You were first into the obviously into the private market always,
Yeah.
not in the public market.
Right.
So you were into the merchant banking or the investment banking as a whole. What made you shift towards this M&A segment?
So I actually spent around 14 years in two firms. I was at Kotak for 7 years, which is where I joined from campus. Actually, it was not an investment banking role. So I joined in the investment role, where we used to look at real estate opportunities, largely credit, equity, etc. So I joined that in 2008. 2015, I moved to KKR, which is a large private equity fund. They were trying to kind of grow their real estate practice in India, so I joined there in 2015. I think 23 is when I moved out. Had been very excited about the startup ecosystem. I'd seen, if you remember, in between 2021, 22, there was a lot of capital flowing into the ecosystem. There were enablers of that capital, like you had these funding platforms which had been set up. So a lot of retail investors were going into these systems, but I was not seeing any exits in the market, or not to the extent or the liquidity that you expect, right? And me and my co-founder, so Rohit, you obviously know. So Rohit actually has been through two acquisitions himself, where both his companies were acquired. The second one, which was acquired, which is a company called Chatterbox, sorry, was in the news recently because they also got listed. So I think it stemmed from there, saying that the private market is so opaque. People don't know how to deal with M&A. It's a term everybody knows, but nobody knows how to do it or understand it. Founders are very nervous कि आप किसी founder को, if you tell him that there's some interest, excitement is there, but they don't know how to work with it. So that is why we picked this market, saying that we have to do something for the M&A ecosystem in India, and that's where we start. I wanted to, that was my excitement, that dealing with the startup founder universe, and second, creating some impact in this ecosystem. So yeah.
So previously, that's what you said it very correctly. Previously, liquidation was only happening via secondary purchase.
Sure.
M&A वाला पार्ट उतना है नहीं था नहीं मार्केट में एंड वी इफ वी टू सी कि वो बहुत लार्जर like legacy brands used to acquire some smaller brands or the growing brands, not the smaller ones also.
Sure.
I would say कि वो
They used to be at least like 1,000 crore, 2,000 crore deals is what you would see.
ये जो छोटे-छोटे companies होते हैं, छोटे in the sense कि having a revenue of say suppose 15-20 crores.
Sure.
They were not being acquired.
There was no market for that.
क्योंकि इनको exit strategy नहीं पता है कि how to sell the company or how to and the companies also, the established ones, they were not looking at them.
Absolutely.
So from your platform, Done Deal, how did you guys solve this problem that legacy brands who want to enter suppose they are already into this shoes category,
sure,
and they want to go into streetwear category now,
sure,
they might look at a brand which is doing 15-20 crores of revenue,
sure,
but अब इनको discover करना ही सबसे बड़ा difficult काम है.
Right.
So how did you guys thought कि ये problem को कैसे solve करना है,
right,
and how will you address the problem कि ये दोनों parties को एक this will be a sufficient fair deal for both of them?
Right. So let's start with that. Like you said, there's a mindset issue on the buyer side.
Correct.
Because you never thought of M&A as a route or a path to kind of fast track your own growth. And that could be, you can attribute that to a mindset as well in India, which is like, if this is available for sale, I think the idea is that ye khud hum bana lenge, we'll build it ourselves. And it could be like you will put in 3, 4, 5 more years of effort. You might end up spending more capital, but you don't think of acquisitions as a good first strategy. But that has evolved a lot. Now, if you go to any mid to large company, you will find this new role, which is a corp dev role or a strategy head role, or an individual who's focused purely on M&A. That wasn't the case before, right? So now we have these people who are in the system who focus on using acquisitions to fast track their growth, right? So it is primarily targeted at them, where we have a platform which is actually free to use for them. They can log in, they can create their own profile, they can filter through multiple sectors, stage of like you said, revenue stage, profitability, growth, etc., and zoom in on a bunch of categories. So if you're a footwear brand and you want to explore streetwear, I think the idea through our platform is, can you go see 6-7 streetwear companies which are all there available, understand what their basic metrics are. We keep the profiles anonymous so that the founder is protected.
Which side? The
the
buyer,
seller.
seller side.
So we obviously, for a founder, you are nervous about wanting to be out there saying that I'm up for sale. So the idea is that you stay anonymous, but and it's not necessary that you're only looking to sell. You might be looking to raise strategic capital. You might be looking to raise funds, but you get an inbound interest from this company, and you choose whether you want to accept or reject that interest.
But me as a seller will know that who is the buyer.
You get to see that, hey, Campus Footwear is interested in acquiring you or investing in you, or at least wants to have a conversation. If it is if it's a smaller company, or if it's somebody it's a competitor, you can reject that interest and say that, hey, I don't want to speak.
Information के लिए, हाँ.
So, but the base information of what your revenue is, what scale you're at, is of course available without your name or what you do. So that is how the platform works, where you have these corporates browsing through the platform and looking at it. And this is as far as who's listed on the platform. I think there is obviously a large universe of players who are not listed, but the public, there are data points which are now available. Like in footwear or in category, you can kind of do a scan of the system and say that there are these 120 brands. So what we are now in this phase of doing is, while we have a marketplace, which is like, dukaan mein ye sab, this is available to browse through. We want to kind of allow a corporate to browse through the entire universe and then choose that, okay, I want to speak to this guy. And then it's our job, using the platform we have, to go reach out to them and see if they are open to a conversation. So it becomes like think of it as a co-pilot for the corporate. I want to enter a system, I want to understand it, I want to speak to people. How do I enable that in a quick way?
Got it, interesting. But the thing which you told was a mindset.
Yeah.
लोगों को यही है कि आज भी this is a big problem. People say that कि हम भी बना लेंगे.
Sure.
So this is a big problem कि when I see something, every other person, and these are very early immature people, which I always say कि I don't believe in the fact कि everything you can build.
Sure.
Might look easy, but it's always better either you partner, you bring in the company. Like I also started doing this.
Sure.
Like I run a production house now.
Right.
I never started building from scratch. I
Right.
found a person, I told him, you only run, I will be working along with you and we'll club the business all together and we'll sell to the companies.
Correct.
Rather than I saying कि मैं खुद एक person लाऊंगा, मैं खुद का
Right.
setup करूंगा.
Right.
Which I understood कि it really helps a lot. So what do you think कि this mindset shift, is it happening very rapidly now? Or like, is it still a problem with people कि they, founders actually, not
Right.
people, founders
Right.
कि ये I will build my own
Right.
rather than I'm going and buying someone?
I think I don't know about the speed of change, but the change is very visible because with more institutional capital, VCs, private equity funds, all investing, they're also looking for faster growth within these companies. And usually the mindset that they at least bring is, you value your time a lot more. So if you want to enter these 3-4 new categories, if you think of a business plan saying that ये scratch से build करेंगे, versus we'll go and either, like you said, either partner, make a strategic investment, acquire it. They are very clear that the second route is much better than trying to build it from scratch, because there are 100 learnings, 100 mistakes that you'll also make. It's better to find a founder or find a company who has gone through that journey.
Correct.
And so I think I'm not able to comment on the speed of change, but 100% that change is visible. Like I said, one, you can see this new role emerging in the market, which was not that large a role. Second, there are a lot of early stage companies, even like doing, after their first or second raise, or even in their first raise, they've gone and made small acquisitions in the market. That was not something they would do earlier. Today, I think, that market has evolved to a stage where a founder is saying, this makes sense, right? And you have learned also how to do these transactions in a better way.
Interesting. So let's talk about few use cases which I have also seen on the internet,
Sure.
which you guys have done those deals.
Sure.
Like I have seen that there one company called as Collective Artists. You guys have helped them in multiple acquisitions, which I believe.
Sure.
So what was and I believe there were few initial deals which you guys closed, right?
Right. I think one good example, while my co-founder Rohit worked on this, I can just give you a little bit of color. So there's this company called Terribly Tiny Tales.
Okay.
Very popular, on at least
TTT.
TTT. It's it's very popular on the internet, right? They do content. They do, they make content for brands, and
They make funny videos also, na?
so, yeah. So they've produced a few, I think, shows as well. So it's a very, it's a fantastic company run by good founders. I think when they first met and then they first registered on the platform, it was important for them, of course, to stay anonymous. They didn't want, to be out there, because at that point they were also in that mind space where they weren't sure what is it they're looking for. So they were open to either somebody coming in with an investment, somebody helping them grow, because they were very, they love the brand, they've built it, they have spent years building it. So I don't think they came saying, we made something, now let's sell it and exit.
And what was the year? How many operational year they operated
uh,
before they started
I
selling?
think at least 7-8 years or more. I don't remember the
And it
exact
was
number.
by willingness they came, right?
Yeah,
It
so-
was not a like
There was
distress.
no distress. I think they were profitable. They were making money. They loved the business. It was growing. But for them, it was like, I think they were very good at the product they had built. And Collective Artists Network, or CAN, is a distribution engine. So they know how to market and sell a product much better than a lot of other players. So I think that was the initial match for them. So they must have had a few conversations. One of them was with them. They had a very good vibe with the founders on the other side. So immediately there was both sides liked each other, and you could see that this product, when it's kind of made available to the distribution and sales engine of Collective Artists Network, can really expand the revenue. I don't know if they tested it prior to the acquisition, but I think they started a few discussions even prior to the acquisition. So that's one way to diligence a company, right? So you just start doing work with them, especially in the creative field.
Creator phase, creator service in agencies.
Anything like that, right? So you want to kind of test it. How else do you test it, right?
Exactly.
So they started doing that. Finally, that acquisition kind of went through. And one thing I'll say is, like, what I really liked is, I think a year after, one of the founders posted on LinkedIn and just called out how amazing the journey was with the acquirer, which is very rare in the sense, like, you normally, somebody sells something, they're out. And sometimes it's negative also, the situation that happens, right? Because what you think, it's like a marriage, so you go in and what happens might be different. But he was very positive on how amazing the journey was within Collective Artists Network, the ability to continue to run it, scale it, and the real value that was created. So this quote unquote, we always talk about post merger synergies.
Exactly.
What are the upside? That played out in this scenario, and that was really great to see. So you had a happy founder, you had a happy acquirer, and the business and the team also really enjoyed the journey.
Because this very matters a lot in case of service-led kind
Sure.
of a business.
Sure.
Because what happens, most of the time your control goes off,
Right.
or you have been started treating as an employee in a
Sure.
other company.
Right.
So what's your insights on like upsides or downsides when you see in most of the cases when it happens in the service-led or the creator agency, this model? Because products ones are very simpler.
I mean, I might have a slightly different view. I feel like maybe if it's service or product or any kind of company, the incentives for the founder kind of remain the same, right?
Okay.
And it's just as difficult, I would say, to kind of transition and do a good job. Maybe where it might be pure cut and dry is, okay, I've written some amazing code and I'm selling that code. So I've kind of, you download my code and then you use it. So you pay me amount for that. Then I don't really care what happens with it. You don't need to talk to me again. You have got the product.
Correct.
Anything else where it's a business of any kind, if it's a product company, take a yoga bar acquisition, or you take at that scale, or you take something as the smaller
Minimalist.
Take Minimalist, where immediately people spoke, right, about
Correct.
Once Minimalist is acquired, what's going to happen to the brand, how is the brand going to evolve. But it's always about how people think through that acquisition, what steps they've started taking even prior to acquiring it to integrate it well. Culture fit is super important, right? So if you operate in a certain style and then you acquire a company which has a very different style. So imagine, just very loose example, but let's say people are work from home, they wear casual clothes to work, simple things, but matters a lot to people. And suddenly you're acquired by, this investment bank, which is all suited and booted, and they acquire them. Now, if you force that culture, then you can, people might leave the system. They might not want to continue. They might be like, I do a great job working from 6 p.m. to 2 a.m. every day. That's the culture I'm used to. Today, now you're telling me, show up at 8 o'clock in the office. I'm not used to that. So it might be as small or simple as that. But those things matter, right? And aligning the founder is also important. So I think more and more what you're seeing is, there are incentive structures in place. So it's not like here's 10 crores or here's 20 crores, I've sold the company. You participate in the value creation over the next 1, 2, 3 years. So if today I'm at 30 crore revenue, when the acquirer comes in, if I'm able to scale my revenue from 30 to 60 to 100, I participate in that value creation, and that makes it a lot more attractive. So rather than just negotiate transactions saying that this is my value and I should be worth more or less, if I get to participate in that, then that is real alignment, because then I'm committed to making sure that this acquirer is able to fully leverage the company.
Correct.
You are as that revenue grows, you participate in that. I think Carrot Lane is a kind of weirdly, while it's a very scaled example, it's an example of that. So from what I don't remember the exact numbers, but he sold a stake, and then the final, when the final acquisition happened, when they bought the remaining stake, Tata paid it on a much higher revenue, and obviously as a founder he participated in that value creation. And I think that is the right formula for at least these kind of handover kind of acquisitions. The other example is, the founder is kind of bored, he doesn't like what he's doing now, he enjoyed the initial journey, he doesn't like the next, then you just kind of hand over the company. But then it's all up to the acquirer.
But as an upsider, actually, when it comes to acquirer,
Yeah,
they acquire because they want to scale their business.
sure.
In case of Collective Artists, in case of Tata,
Or enter new product, enter new category. Yeah.
But this happened completely opposite in case of Byju's.
Right.
Like when the companies which were working very well, after they got acquired, they started performing very bad in terms of White Hat Junior, in terms of. So, is there any problem either with the team who is acquiring, founders leaving behind the company after selling the company,
Sure.
or anything else which matters a lot in terms of making that existing company which is getting acquired a success?
Right.
Because it's the founder who were running it, suddenly they sold it and the founder is out.
Yeah.
They've taken the money and the founder is out.
Right.
Now somehow the acquirer didn't able to run it as efficiently as the founders were running it. So do you feel that this is a particular kind of a reason, or might be some other scenarios?
I'm not sure specifically on this Byju's example, but if you think about examples where acquisitions have been made and they have failed, multiple reasons, but one critical one, like you said, is how aligned the previous founder was. Second is how mature the acquirer was. Now I've spoken to a company which is doing like 150 crore revenue. I was introduced to them by one of the board members. I liked the fact that when I spoke to the founder and I told him about what we do, he said, we're not going to acquire. I said, why aren't you going to acquire? It's a great way to grow, etc. He said, I see the value in acquisition and I agree with you that it probably can be valuable. But he said, right now, as a company, I don't think we have the maturity to absorb a smaller company. Because while it's easy to buy this company, I'll put some cash on the table, I'll do a stock swap, whatever the structure is. He's saying for me to be able to integrate this nicely and really do justice to it and grow it from, let's say I buy a 5 crore company and I want to grow it to 100. He said, I don't have that maturity as a company right now. He's saying maybe a year from now we will have that. But right now I'm still fighting fires, trying to get my own DNA in place. So I think that's interesting. Right?
Because I have seen, it takes 6 months to 1 year to combine the team and make it a.
It's not easy to do at all. Yeah.
You need to understand their team. You need to make sure that how you're proposing the value proposition in front of your customers, which is very important. Because or else that communication is not going out.
100%. No, I think successfully being able to acquire companies is a huge skill, right? And it's not easy to do. Like you said, you have the risk of everything from people leaving to losing clients to everything. You can think of it. One is, of course, you can do the groundwork, 50 days, 100 days ahead, you can think, okay, this is the plan. But to execute it, every company that I've spoken to who have made acquisitions, they always say that once they've acquired a company and learned that full process, then they feel a lot more confident on knowing what to do. And they've learned. So it's almost like you have to make those mistakes also. Of course, today you might have service professionals who can help you in the, post-merger integration and doing a better job. But finally, as a company, you have to go through that journey. You might make a mistake. You might be successful. One is, of course, like you said, am I overpaying? Have I made a good deal? But, just successfully integrating a company is a different playbook altogether.
Correct.
And people who have done it, and if they've done it once or twice successfully, then they have the confidence, the ability, they have the playbook. Okay, this is the way I will acquire. And a lot of examples of that, Collective Artists is one, there are a few more, who, have used acquisitions as a engine and have successfully, merged each one, right?
So this is very interesting use case which you talked about. But anything else which you think कि जैसे एक और होता था, Scoop Whoop got acquired by this company called WLED. So with WLED you guys have done lot of use cases and deals. So any good learning which you got from them, because they are into this agency business and a content business actually.
I think one thing which I find interesting there at least is, the founder is very clear. So when he kind of, was found this opportunity on our platform saying this is available, he, I think, closed the transaction in like less than, I think, 30, 45 days end to end. So giving that comfort to the seller saying in the next 30, 45 days, I'll complete my diligence, the money will be in your bank, is sometimes a lot more valuable. Like you can extract a lot more value than saying that मतलब अगले 2-3 महीने हम डांस करेंगे, मैं बोलूँगा 50 crore, तो बोलेगा 100, फिर we'll keep negotiating. So sometimes that going in with that clarity helps a lot. I think you can, I like that. And, not over analyzing or over guessing. He's done his work, studied the market, understood what he wants to acquire, and then, just firing the gun, right? So I think that is a good learning, I would say. You can move faster, you can create more value for yourself. I think that is a good strategy that at least WLDD and Arihant kind of deployed. And he's, somebody who loves using M&A as a growth hack. To that point earlier of somebody who values time and money, he values his time. So he's like, if I can use this to acquire this, I will do it in the next 1 week, 10 days. Very interesting the way he operates.
But what about this, again, from a seller perspective, there's always a stigma कि they see acquisition as a not a good option.
100%, yeah.
People think that कि मैं बेच रहा हूँ तो मतलब मैं अच्छा परफॉर्म नहीं कर रहा हूँ.
Correct.
People don't see कि मैं इससे पैसे बनाऊंगा and I will also give money to other of my stakeholders.
Right.
These people were back in 2021,
Yeah.
when I used to invest in startups, there were only two options of how will I get exit as an angel.
Sure.
Either secondary or either
IPO or something one day. Yeah.
They were not putting M&A, acquisitions,
Yeah.
or talk about partnership.
Sure.
Like some bigger company coming and taking the majority stake.
Or taking a
51.
stake. Yeah.
When you're taking 51, then automatically most of the scenarios are there like angels will go off from the cap table.
Sure,
कि founders है और major वाले हैं.
Correct.
So people were not writing those options. Now we see we have 4 to 5 options: IPO, secondary, M&A, or partnerships,
Yeah.
or selling of majority stake.
Yeah.
ये 3 options or people have included because these 3 options have included now.
Yeah.
So how do you see कि why the founders think कि acquisition is not a good thing?
Yeah.
That is first. And second, in terms of there are so many distress sales happen.
Sure.
So why those are not being quantified into this particular manner properly?
Right. No, first, like, you ask any founder why you're starting this, I think majority of them will say that, obviously we're not building to sell this business. And that's usually the case. And maybe there is some merit in saying that, I would say rather than saying it's a black and white, saying this is good, that is bad, it's, I think, different routes. You either have clarity that I'm building to sell this, in which case you build it in a certain manner. Another one is that, hey, I'm going for the IPO, and that is every founder's dream when they start up. So you use everything from VC capital, angel capital to get there. But you're not, keeping this as the, it's a route C or route D, but it's not your primary goal, right? At least the good thing is that now these options have become more on the table, right? And I think one, fund which talks a lot about it is Bloom. I think he almost does like a weekly or bi-weekly, he talks about acquisitions and using, how they have successfully sold some of the businesses that they had invested in and made money. In fact, a batchmate of mine from IIM, Tanmoy, he built a company called, forgetting the name, Metal, which was acquired, right? So, and it was a Bloom investment company. So I think the option is now getting a bit more, it's becoming more mainstream. Second, like you said, the tendency to think is that if I'm getting acquired, I'm failing or I'm not doing well. And that is the only reason I should sell. And that is, to your point, that becomes your distress deal. So when you have no money in the bank, you have no other option, then you are like, M&A is my primary objective, and then you go out in the market. And very difficult at that stage to get a good transaction because your team has started leaving, your product is not selling in the market anymore. So obviously the value you're going to get is going to be, cents on the dollar invested in the company. What is better now is to kind of look at it as, you have a VC route, you have, you can be bootstrapped, you can raise angel capital. Now, corporates investing in you, think of it as another source of capital. And it's a capital source that comes with some benefits where you can either use their distribution, their reach, their financial muscle to scale your revenue faster, get to profitability faster. And people are now looking at it that way. So you now see a lot of corporates either using, they've created this small pool of capital, call it corporate venture capital, where they've got a team now evaluating companies and investing minority investments, just like any other fund. Eventually, it can be a case that you acquire it, but that's not the reason why they invest the money. And it's very beneficial to a founder versus, other routes of capital having a large corporate invest. You get so much more benefit in terms of their intelligence, their skill set, etc. So that is becoming more mainstream today. So what I like to now think of it when I speak to a investor or a founder is to not say that, hey, are you up for acquisition? Rather, are you open to a strategic investment, right? It can be an acquisition. It can be a 51% stake. It can be a 10-20% stake. But are you open to those conversations?
Correct.
If you're not open to it, that's fine.
That's
so
fine.
then, we won't enable that. But I'm not asking you, are you looking to sell, right? You can sell as one of the outcomes, but are you open to these routes? And that more founders are now open to today.
Because sell is that particular partner, founders do get trigger. So I'll give
Right.
you one scenario. So what happened? Someone started a company in 2019. First year they did around like 50 lakh of revenue.
Right.
Second year, the Corona year, they did around like 4.5 crores of revenue. Now
Right.
suddenly they got an offer from someone that you do a share swap against 10% of our company.
Right.
You get a salary of 30 lakh rupees.
Correct.
You don't get any cash.
No cash. Okay.
No cash. But 2 years before the launch and 2 years after the launch, 4 years the founders ran the company.
Right.
But he demanded some cash also, and
Correct.
he demanded some kind of a less lock-in period.
Sure.
Lock-in period was 3 years actually.
Sure.
3 years you need to work with us in order
Right.
to scale this.
Right.
It didn't sounded any kind of a good deal for the founder. And founder
Right.
worked. And founder had also the dream that अभी 4.5 crore है, 20 crore बनेंगे next year, या
Sure.
30 crore
Sure.
बनेंगे.
Sure.
In such scenario, how founders would deal this?
I think it's completely fair, and it might be personally driven, right? For a founder that, I'm open to a cash deal, or I'm not open to it, or I want some cash on the table. And I don't think that is wrong at all. So you can have your clarity saying, this is what I want. I think where founders sometimes get it wrong is on the valuation of the business. If they are valuing their business correct, which means they're putting themselves in the buyer's shoes. I'll give you a small example, right? So sometimes it's like I've raised 10 crores, VCs have invested in me, and my valuation is 100 crores.
Okay.
Right? Does that mean you're worth 100 crores of cash today from a buyer's point of view if they were to acquire you? The answer is no. VCs have put in this money kind of underwriting your future projections, underwriting the fact that with this 10 crores, you will get to 100 crore 2-3 years from now. And they're taking, 100 of these bets. 30 will fail, 30 will do average, and maybe 10-20 will do very well, right? So that's from the VC's point of view. But from the founder's point of view, the second you've raised this money, it doesn't mean that, you have created that value today. You have to grow into that value over time. So I often hear this thing that, hey, I raised capital at 50 crore valuation. That time I was doing 5 crores of revenue. Today I'm doing 10 crores of revenue. So my business is worth 100, right? Like 2 times. I'm like, no. You maybe because you have doubled your revenue, you are now closer to that 50 crore value. Because when they put in that money, they believed that in year 1 you will double your revenue, year 3 you will 10x your revenue. So when that happens, you have grown into this valuation that has been given. And if somebody comes and gives you an offer saying, I'll pay cash, I'll pay stock to buy you, you are now worth that amount. So you can't be like, I got valued at 100 or whatever that number is, and now my revenue has grown 10x. So am I now 1,000 crore company? That's wrong. So I think if founders should get their valuation correct and have a clarity on what their company is worth. In terms of asking for money, saying that I want upfront liquidity, I think that's a personal choice, and I think you should fight for it today. You should, because once you sign this deal and you close it, you shouldn't have a regret tomorrow that ye hota to I would be more comfortable. Definitely take what you believe you should get, right, in terms of structure, but don't get the valuation wrong. So I'm fully supportive if somebody says I want 2 crores, 4 crores in cash upfront. I think it's mitigates your risk also, right? Tomorrow you do a share swap deal. The company that acquired you with shares, if that goes down, you're worth zero.
Correct.
And we've seen examples of that in the market. So to mitigate your risk, 100% get some cash or chips off the table.
Do you know who's the founder of that particular company?
Which company?
The example which I gave.
No.
Me. So
So you got an offer.
2020, 1 May I got an offer, September month.
Yeah.
And September 5th I got the offer. September 5th I had a meeting.
Yeah.
I stayed with them for 1 day
Yeah.
in their home because of family business.
Nice.
So they invited me. They made me eat food in this silver plates and all, everything.
Right.
Pure good family business,
yeah.
a listed company, very big conglomerate in India.
Yeah.
So I stayed with them for entire 1 day. So by morning I went, next day evening
Yeah.
I left their home.
Yeah.
And after a week they gave the offer.
Wow.
And offer was very simple. Non-negotiable offer.
Yeah.
10 crore of my valuation of the company. Their valuation was, of their subsidiary business was 100 crores.
Sure.
10% of it.
Yeah.
30 lakh of this. Shifting to Mumbai.
Yeah.
3 years lock-in.
Yeah.
That was negotiated 2 years also.
Yeah.
But no cash upfront.
Yeah.
So, and today if I feel that particular, so now for me also today I feel that particular part of business which I was about to build and sell, that would be a better time, because not every businesses ran for the entire life journey also, because that time of that particular model has exhausted now.
Sure.
For me.
So it could have been a great time.
I feel now that for that model, if I was selling in 2021, 2023, I could get out of it.
Yeah.
And I could have done something else also.
Sure.
So that also happens with the founder mindset.
Yeah.
I think in 2025 now, if I would have sold that business,
right,
I would have at least get one tag of exit.
Sure.
So this is where I personally now say to founders, if you're getting an option of exit in your very early years of your journey, and you see that the potential of this business is not that larger, sell it.
100%. Yeah. No, I think it's timing. The cycle is everything. And it's also like, I think we hear it all the time, like a founder comes to us and says, I thought that this was a $500 billion company, and that's how I started it. But now I can see that this will go to a 50 crore, 80 crore, 100 crore outcome. So I'm not excited by it. So I think great option to kind of go explore whether there is a strategic or an acquirer or a buyer to, just go to and, at least find an exit for your business.
There was another deal which you guys facilitated, which was 150 crore plus of BPC deal.
Correct.
The name was not disclosed because of anonymity.
Sure.
And so what was that? Like how that thing happened? Because it's a 150 crore is a good amount in BPC category.
It's sizable transaction, and obviously the BPC space has been hot, right? And we've seen listed players expand. We've seen a lot of brands scale up quickly, and might be thanks to new channels, quick commerce, just consumption power, all of that coming together, right?
And it was a cash deal, complete cash deal?
It's completely cash deal. So there, what is the case is that, we had it was a bootstrap company. They had, they had put in, I think sub 1-2 crores of their own capital.
Initial days.
Because they're not from a very large family or anything. They're just, focused builders. When they listed on a platform, I think they were doing 2-3 crores a month, which is not very small, right? So it's a decent amount, 25-30 crore run rate. By the time they were trying to, this transaction got closed, I think they were doing almost 7-8 crores a month. So during that time frame.
And frame from listing to frame?
Maybe less than 5 months or 6 months.
So they have grown to 4x.
They grow almost 4x during that time. And that actually helped these conversations, because all your investors, acquirers are like, wait, we were tracking this business on your platform. You told me they were doing 2-3 crores. Last update I got, it's saying 6 crores. I want to go speak to this person. Earlier I said it was too small. Now I want to speak to them. So we had all those cases, right? So he would have had, I think, at least 10-12 conversations through us with different parties. Some were acquirers, some were family offices, some were VC funds. Different types of questions from each person, right? A VC fund might say, can this become a
1,000 crore business.
1,000 crore business. A family office might say, can it be a 500 crore business, right? Can it be a profitable 300 crore business? That's also a great outcome. So everybody has a different thought process when they enter. But he had all these conversations. He benefited from all these conversations because each, you're learning from each side. But finally, he felt, the best equation, I would say, with this person. Or this, it was a family office finally who did the transaction.
So it is a strategic or like a...
It's like a strategic. So they put in capital into the business. That's the main thing. They obviously bought a little bit from the founder. So he got a bit comfortable. At least he's got some cash now in the bank for the journey that he's been on. and eventually he will sell the majority stake in the company. Maybe will they both sell it together, will they both list it? All these options are still on the table, but at least that initial step was taken. And like you said, BPC is a very active M&A
So
space.
it was a very comfortable deal
For
on
both
both the
sides.
sides.
Yeah.
So, but founders are still operating that.
Completely, and they'll continue to operate it. Eventually what happens is a discussion between both of them, but for now the founders are like
It's
at
happy.
it,
It's just they got money also individually and in company also.
and mainly in the company.
Both the parts, and then they have a good support handhold now.
Yeah.
Now they will be able to grow the business.
Correct.
So it's like a that deal.
Correct.
It's a dream deal for someone
For
who
everybody,
become
I think,
who is a
and
bootstrap category for them.
especially for somebody who's bootstrapped.
Exactly, because
And
we need to understand which category the people are.
100%. And if you think about, one is when you build a 10 crore, 20 crore, 50 crore business, but as you now you're now the founder of a 100 crore, 150 crore, you need a different skill set to operate that also. So having this strategic in your backing is also a great way to learn that, right? So they are talking about how do we hire a nice board now, how do we get a new management in place to kind of, run operations, run supply chain, run marketing. So maybe the skill set that you need to take this to a 500 crore brand, rather than force yourself to kind of get into it and you do it well or you don't do it well, this is a great way to kind of travel that path together.
Correct.
And it's the same example of saying that your valuation today is X, but tomorrow as your revenue scales, you are deriving value from that also, because you have not sold the entire business. Rather than you have diluted a significant portion, and you'll keep diluting along the way.
What is the most fascinating kind of a conversation which you guys facilitate more, like in terms of strategic partnerships, strategic acquisitions, completely sold off, or an investment from a VC?
I mean, all of these we've probably done one in each. I'll take a funny example. There was a startup which I was introduced to because he was actually from my hometown in Chennai. It's actually a biotech company. They, hardcore drug research, right? Something that India doesn't see a lot of, right? People keep talking about how a lot of Indian startups do 5 minute different delivery. There's not enough innovation. That's become a controversial thing people talk about. This was a company really doing that, right? So these individuals who founded it, they've studied in India, they've studied in the best schools in the US, come back and they're building something which is real science, real deep tech. Now, they found a corporate, which is a large pharma company, who had backed them long back and continues to back them. But when they they came onto our platform, they had a lot of VC conversations. The unfortunate thing is, because this is so specialized, a VC who doesn't know it already, or who doesn't, who's not into the space, will find it difficult to understand what is being done, and then you have to underwrite it and all of that, right? So that is why a lot of the VC conversations they've had great conversations, but it usually ended with, let's stay in touch, keep us up to date about what's happening. But that didn't happen. So randomly, I think I was at home that day, and I saw a post on LinkedIn about this particular public market investor who, who is very under the radar. You won't find him on LinkedIn, you won't find his email ID anywhere. But apparently he's very active on X or Twitter. So I think that same in the next 5 minutes, I sent him a message on Twitter.
And this is not an Indian person?
Not in, yeah, so sorry?
It's not a person is not based out of India?
He's based in India.
Okay.
Indian investor. So I just messaged him on X, I think it's on X, saying, hey, I'm so-and-so, we run this platform for this deep tech drug discovery startup. I wanted you to take a look. I think in 5 minutes, I got a reply saying, mail this, send me an email on this ID. Send that email. I think 3 weeks later, we were in front of him having a conversation. At the end of that half an hour maybe 1 hour discussion, he said, I'm committing this capital. In fact, he upped his commitment from what he originally said to, I think almost 2-3x what he originally committed. He's upped it also. So I think for me, the learning here is, of course, it's very interesting how it converted. But for me, it's more about how there are great opportunities and great providers of capital. And there is so much chance in all of this. Do you have a good banker emailing you? If these guys had cold emailed him, maybe it would have happened. If he is your friend and they meet you, maybe you will make this. So it's, it's still so many small events. If they happen, suddenly you have this transaction. And there's another world जहाँ पे ये transaction कभी होता ही नहीं, ये लोग कभी मिलते ही नहीं. that for me is interesting. So that I'm taking back and saying, as we build fundraising as a vertical in Dundee, we have to solve it for this use case at scale.
This thing you have quoted very nicely. What happened, which I am also seeing nowadays, people do take strong referrals or recommendations very nicely.
100%. Yeah.
Now VCs, actually, if I know VCs, if I tell them that talk to this startup,
They will talk.
They will talk now.
Because they trust you now.
Exactly. Yeah. So this has become a very strong channel.
Yeah.
Cold DMs have been vanishing a lot, actually, because people are not replying, because
there's too many, right?
Exactly.
If you go on LinkedIn today, you can probably download this list of all the VC names and email IDs. And if everybody in India has access to that, that means imagine what that inbox looks like. So it's no longer about, just that email landing. It's more about, at scale, how do these conversations happen, right?
With me also, like, there's a portfolio company of mine which is called FlexiPay. To him, I introduced to all VCs I know, and with everyone, even if they're not investing, they have at least replied or they have had a meeting.
Right.
People who are not focusing on those investment thesis or the sector, that was okay.
Right.
People were in this particular focus area of B2B SaaS kind of a thing. Right. Everyone spoke.
And but that is happening because of your credibility.
Correct.
You must have shown them good deals in the past. You must have co-invested with them somewhere.
So that thing happened a lot nowadays. Yeah. And these cold DMs have exhausted like anything. Yeah. Also, when any founder wants to sell his or her own business, the one thing they get stuck is compliance.
Right.
People have just done here and there whatever. Companies who are running for 5-6 years, there will be scenarios that some or the other things are missing.
Correct.
People don't take this very seriously right from day zero, that when the time of such kind of thing happens, either you are raising money or you are getting into
any capital event.
Yeah. Then all the trouble happens. This extends the time from 2 months, 3 months, 6 months. Because you have to clear that mess.
I would say it doesn't just extend the time, it's a reason why a lot of transactions fall through.
Okay.
Because, what happens is, let's say I met you, you say that I'm raising money, we shake hands, I like you, and then over the next 3-4 months now, diligence is being stretched. Where, you didn't have this document, you didn't have that document, you didn't have your trademark registered, you didn't have like some, share certificates are missing, share certificate pe stamp duty nahi pay kiya, whatever, right? Some 100 reasons. Then as an investor, start seeing that as a major red flag, right? So they start wondering, am I backing the right person?
Correct.
If this is the case today, what is going to happen tomorrow? Time is the enemy in all transactions.
Okay.
If you have your documentation, everything ready, then you can help close a deal for yourself much faster. Vendor diligence is a very popular thing, at least in the US and at least in India also. It's in the larger companies do it, which is, you're not raising money today. You go appoint a EY or any large, either a Big Four or even a good, any solid CA firm today, and say you do a diligence on me as if I were raising money. Like, point out every red flag you can, go through every one of my documents and prepare a report for me so that I can correct what is missing. So that's, it's a diligence that you do on yourself. And by doing that on a regular basis, then you are far ready when you actually go into the market.
Correct.
So it's a very popular concept when you go meet an investor saying, I've got my, on my own DD report. I know you might not rely on it and transfer money.
That is okay.
But it's a great starting point. It means that 90-95% I know is now cleaned up. I don't have to scramble for, this chart and that report.
And one more problem arises, like if I send you the list of documents which I need as an acquirer.
Correct.
If I take more time by sending that acquirer stop getting stronger interest.
100%. I think that's something like, while we're a platform, we said that on an initial journey, we will try and build some brand around us. Discovery should happen more. Now we are getting into the deeper set of problems, which is, how am I prepping a company that they're listed on Dundee means that they are ready. So, and for that to happen, it can be a mix of tech, it can be service providers, but that process we are spending more time on, right? Because we can see, like you said, the difference it makes in a good conversation versus ki interest aaya, you come onto a platform, you get interest, and now the guys like, send me your projections, send me your historic, and you're like, haan, mujhe 2 mahine do, I'll create it. That conversation immediately starts dying out. So that will be, probably the next phase for us. How do we kind of improve that?
Interesting. So any percentage of deal which you guys also have an inflow where you guys only connect or help the founder in fundraising, not the strategy part?
Absolutely. So we've started this vertical, I'd say 2 quarters ago, where we heard from a lot of startups that, hey, we are not looking at all in it, like, it's a path we are very clear on. We are not looking for a strategic investment.
Okay.
We are not open to acquisition. But we are right now going in the market to raise.
But what the difference? Because the first part, which
Yeah.
you guys doing M&A,
Yeah.
it's a very unique USP which
Sure.
you guys have created.
Sure.
I have not seen any platform
Sure.
doing this more efficiently than this.
Sure.
And personally, I have known you guys from 2 years now.
Correct.
Even if you have said anonymous, that is anonymous.
Right.
Not from anyone we will hear
Yeah,
the name.
you can't. Yeah.
That is where you create the USP. That if you
Right.
said you anonymous, ऐसा नहीं होता है कि 10 लोगों को पता हो, but platform में anonymous लिखा है.
Correct.
वो 10 को भी नहीं पता है.
Correct.
So which is you guys have done very good. But
Sure.
in terms of fundraising, it's
Yeah.
a very common thing which
Right.
other IBs are doing, networks are
Sure,
doing.
sure.
So how you guys are differentiating? In
I think what is important, there are two parts to it. One is, of course, in terms of the fee we charge. I think we are able to position ourselves better. We charge a flat 2% fundraising fee, which sometimes you will hear in the market. There are 4, 5
upfront.
Give me a stake in the business.
You guys are not doing that.
So none of that. Right?
Upfront
so
also.
Upfront nothing. So it's at least it's more clear and professional.
Transaction 2%.
And it's on the website when you sign up. So you don't even have to do this thing कि founder को phone करके पूछा कि can you come कर
समझ गया.
So it's very clean, right? So that's one. It at least gives a transparency and clarity. Second, you're kind of permanently connected in the system. So one is, of course, you will raise capital at certain stages, but during that journey, at any point, VCs might want to track you. They might say that today I don't find the startup interesting, but I want to keep an eye on this one.
So you guys are listed.
So,
You guys will
so listed, and you track that company tracks you. So now that the fund is tracking you as you grow, maybe every quarter, whenever you give an update that my revenue has increased from X to Y, those updates flow to these VCs. So we kind of start building a conversation flow for that startup even before they are planning to raise, right? The scale at which you can do an outreach much quicker is something that is exciting. And like you said, these credible connects that you have in the ecosystem, we're able to bring that through the platform. And for somebody who's open to both, who's open to VC capital, also open to corporate capital, then our platform still becomes this one place they can come to. Today, he's raised his first VC round through our platform. 6 months from now, he gets an interest from a corporate for M&A. So it's like, so there's a banker working for you all the time. Instead of, ki, matlab, aaj I've appointed you, you help me raise capital. After that, you have collected your fee and
disappear.
You have disappeared, I have disappeared, you don't care about me, you've not thought about me. Being on the system almost enables that, allows us to keep a focus on a company all the time. So I think that is the advantage. So a lot of companies who are coming for fundraise are getting inbound interest from corporates. A lot of, maybe not the other way around.
And this raising part also is visible to all the acquirers and VCs, right?
Only if they choose. So if a founder says, I'm only looking to raise, he will not be discovered by a corporate.
Okay.
And if he says, I'm only looking to get acquired, he will not get discovered by the VCs.
Both, if I can choose both.
You can choose both and you will be discovered by both.
Like
and
either I can raise money, either I can sell my company, I can have a strategy partner.
Absolutely. So all routes are kind of open. And for the VCs, what we have done is we have allowed them to open the pitch deck. You study the company, you do all that work, and then you set up a time with the founder. So there, the idea is you don't want, you obviously anonymity
in
terms of raising money.
Anonymity is not
anonymity is not required. You want these to actually get promoted. You want it to hit the mind of the VC that this is an interesting company. So today we are just scratched that surface and started. I think what we want to build on is signals. So now when we know that there are VCs speaking to this, or there is let's say fintech this space is getting hot, we can kind of use that kind of knowledge to provide more intelligence to the founder, to the VC. That is exciting for us, right?
Interesting. In terms of diligence, we do the thorough diligence on the startup, but shall we do a diligence on acquirer also? That whether this acquirer is good or not.
Yeah.
Because I get a mail nowadays that, hi Rishabh, I am this, I want to invest 25 lakh rupees in any business and can let me know.
And you don't know who this person is. Yeah.
Correct. So that is very straightforward. Over this, I know that this is a shady person. I will not reply.
Sure.
But in terms of very good companies also sometimes,
Yeah.
we see that this might not be a good company with whom founders will be happy to associate in the future.
Correct.
Can be a scenario. This is
Yeah.
a toxic company for a founder,
Sure.
just like an employee or a
Yeah.
founder's relation.
Yeah.
It might be a toxic company for the founders also. So do that check is also required, because as a mediator,
Yeah.
that is very important, that we don't allow those companies, even if that company is doing 1,000 crores of business,
Yeah.
but as a professional way, that is not a good for a founder.
Yeah.
Do you guys do that?
I mean, we banned companies who have not worked properly. Like if they have, shown interest in startups, conversations have been set up, they have not, come on to the call. So those companies we have kind of revoked access and we have removed those apples.
Okay.
But, for us to kind of force fit and say that this company, you should not entertain a conversation, I don't think is our job. I think we should have the data should be available. And if
So you guys will stop those people, like suppose
who are not acting properly on the
Ah.
system, they are removed, both sides. So at least the quality of conversations improves. But if I kind of take your question of should a founder diligence, unless it's a 100% cash deal and you're taking the cash and of course the company is legitimate and there's no nothing shady about it, then you don't care beyond
Exactly.
a point. Maybe, to the
so
extent
working with them.
if you're going to continue to work, if it's a stock swap, if it's anything like that, you're fully invested, right? So of course, if it's a Marico, then maybe you don't need to do a lot of diligence. You know how great a company the acquirer is. If it's anybody else, right? If it's a smaller, if we go make an acquisition today and we do a stock swap, it's completely right
Fair
for the
enough.
founder to say, what is your business plan?
Exactly.
How much revenue did you do last year? And I have to study all of that. I can't just be like, तुम्हारा डेटा मुझे पूरा दे दो, I will not share anything. चाहिए तो ये shares लेके चले जाओ, right? So I don't think that's the right model.
How many transactions you guys have facilitated till now in terms of acquisitions from your platform?
So including fundraising and acquisitions, we have completed around 20, 22 so far. We have 8 transactions which are currently underway, all in diligence. So we are hoping that all of them close in the next 1 month or so. So the traction or the volume of transactions has slowly started to increase. So we've kind of got our hands full for the next few quarters. That's how we want to be. I remember the first, year of operation, we must have done 2 transactions. Next year we did like
14,
10 or 12. This year we should do at least 20 or more. So I think it's doubling or 2 to 3x minimum.
It will increase more, which I suppose, because market will get consolidated. People will start selling.
So the trend is definitely increasing. I think it's up to us on how we execute, position, and all the value add that we have to do. Can't be, you can't be just sitting back and say, आप लोग बात कर लो और मुझे अगर कुछ deal close कर रहे हो तो मुझे transfer करो. I don't think that works. So you have to add value to the founder, add value to the strategic, and that, have we done enough? 100% no. That's why, we still go every day and there are 10 more ideas that we need to execute on. So
last piece of advice you will give to the founders who are selling their company, who have started the process of selling the company. Like, I want to sell my company. This thought has came into my mind.
Right.
What will be the best advice, or like any advice for them, that this is few things which you need to keep in mind when you start this process?
Okay. Few things, definitely. I think this diligence point is critical. So making sure all your, your books are completely in order is critical. I think second, or probably more overarching, I would say is, in a way, disconnect yourself from the company. I think sometimes as a founder, you feel that, hey, ये मेरा
पता है
बच्चा है, ये
मेरे साथ हो चुका है.
मैंने So I think if you're able to disconnect from the business in that sense, you can take more logical decisions. So the company is bigger than you. You are a large shareholder in the company, and that's, you can call yourself also the founder. You have helped build the company. Nobody takes that away from you. But the company is a company, and it makes revenue, it makes profits. It's in a particular sector, which might be doing well, it might be doing badly. So that you have to disconnect and allow this company to reach its best outcome. If the best outcome for the company is it needs to be owned by somebody else, then that's the path it should be on. If it should go list, that's the path. If it should raise VC capital, that's the path. But if you're like, मैं तो, IPO ही करूँगा, so मैं ये VC से पैसा नहीं लूँगा, that's, you're doing a mistake, right? Or if you say that, how can XYZ do a better job than me, I'm the best, then you're making a mistake. So I think ego को side पे रख के treating the
ईगो
company.
को साइड बिलीव एंड आल्सो दैट थोड़ा सा वो भ्रम में जीना. आई नॉट गेटिंग इंग्लिश वर्ड आउट ऑफ इट.
हाँ.
कि
मतलब delusion.
हाँ, delusion.
Right.
Delusion में जीना. So
Yeah.
कि I will make this company very big, which
I
I
mean,
was.
that is a fact that today if somebody were to come to us and says we can do a far better job of what you're doing, I should take that conversation seriously. If I'm like, बस ये तो मैंने start किया, ये मेरा blood sweat है मेरा, but therefore I will not talk to you or even want to understand who you are. That is a mistake. Because then you're doing a injustice to your shareholders, to your employees, to the company.
Everyone. So now, but this trend is changing. People are listening.
People are starting to listen.
Correct.
They are seeing success stories, so they are
Exactly.
getting, they are seeing failures, so they are learning from that. So I think at least thoda ego is going away.
In market, secondary exits are way more lesser than as compared to M&A exit, which I have seen personally.
Wow.
Because many M&As are not happening in open, like news are not
Sure,
coming out of.
sure.
So many M&As are there, which I
Sure.
don't see. We get to know after 1 year that this company got acquired by this company.
Interesting. Yeah.
And it is very hidden deals.
Yeah.
People get acquired, they keep
Keep it
operating
quiet.
like, हाँ.
Yeah.
So these are that I have seen, but secondaries, you see last couple of 2-3 years,
Yeah.
many angels who have started investing in 2021-22, they've stopped investing in 24-25 because of non.
They have not got the liquidity back. Yeah.
So liquidity is a big problem, and
I think that's something over time, that's the first signal of a mature market, right? I think, see, we have, so much has happened in India and the startup ecosystem very quickly. So, but are we a mature, developed market? The answer is no. We are, years away, maybe a decade away from getting there. We are just very fast at anything that happens in India happens very quickly and movement happens. But I think, like you said, we have just started that phase, next phase of, you're seeing a lot of unicorns getting listed. You're seeing so many more IPOs happening today than before, right? People will see the performance of these IPOs next. Then, like you said, M&A will develop. Secondary will then start.
going.
Yeah. So once that liquidity flow happens, which requires mature founders, a mature ecosystem, then everybody benefits, right? Every deal that we close, we also think about how this capital has now gotten rotated, right? Which is great for the ecosystem. So whatever, if we do a 20 crore deal, now that 20 crores is back in the ecosystem, it can go into another 10 startups. So that is interesting.
Exactly. With this, thank you so much, Anis,
Thank
for
you.
coming in and doing this along. And
Thank
it was pending for a long time.
We'll do a lot more.
Yeah, definitely.
Thank you
Thanks
so
so
much.
much.
Thanks.